Hello and welcome to the special edition of Simply inTAXicating. Today we are going to talk about and discuss in details the Indian Budget 2015. The Prime Minister, while hailing the budget presented by Mr. Jaitley, described the budget by 5 P's. He said, P number 1, the practical, the progressive, pragmatic, prudent. So he found that this is a bundle of true economic wisdom and fiscal wisdom. Prime Minister also talked about the measures proposed by Mr. Jaitley against the black money, going to bring back every rupee of the Indian wealth lost in the past and stashed in foreign vaults. Of course, we look at the general reaction of the corporate India, the different segments of the economy, economists, fiscal experts. It appears that Mr. Jaitley has relied a little more on the indirect tax sides to gather revenue this year. On the direct tax side, of course, apparently has not given too much from his kitty because individual taxpayers are not too happy. The roadmap which is suggested is certainly pragmatic. It talks about the long-term vision. It also meets the 3 C's theory, which is related to the tax system in any country. That is about the certainty, that is about the consistency, that is about the stability. All those aspects may be attributed to Mr. Jaitley's budget, but unfortunately, the domain experts find, even TIOL editorial team has come to a conclusion that Mr. Jaitley is relying more on the indirect tax proposals to garner more revenue. This should not have been the case. Every progressive economy gathers more through direct taxes, not indirect taxes, because the incidence of taxation will be borne equally even by the poor segment in the poor communities in the economy. Anyway, my colleagues, senior editors, Asha and Sudipto, joining me today to talk about the various dimensions of the budget, the proposals, with respect to direct taxes, of course. We will have a separate program in indirect taxes later. So, Asa, tell us briefly, first of all, maybe in bullet point forms, what are the key changes you find so far as income tax proposals are concerned?
Well, like you said, it seems like a very pragmatic budget. And to touch on the international tax, some of the international tax proposals was he has done away with GAAR. It was a controversial tax law. He's deferred it for 2 years for the time, done it away for the time being. The second change he's brought about is he's reduced the rates on royalty. The tax on royalty has been reduced from 25% to 10%. And the third thing which he's got about, which is a very welcome move for the industry, for companies, it's the threshold limit has been hiked from 5 crore to 20 crore for transfer pricing.
For domestic?
Yes. Okay. So now only if your transactions, your specified transactions are more than 20 crore, then you have to get into the transfer pricing
only
norms.
Then the TP provisions will probably inconvenience you.
Yeah, they'll activate when your aggregate is more than 20 crores. And another good thing he's done is he's given the power to the CBDT to frame the method for granting foreign tax credit.
Okay.
So earlier there used to be so much of discrepancy there and ad hocism which used to be there. So now it's going to be a little more methodical. And well, and there's good news for FIIs also, because whatever their income was from corporate bonds and government securities, the 5% tax which they paid, now that has been extended. It was valid, it was lapsing. Okay. It was lapsing on June 2015. So that has been extended to 2017. Yeah.
Okay, so let me go to my colleague Sudipto. Sudipto, you have some interesting points to share with us, with the TIOL viewers.
Since I'll be more focusing on the corporate issues, so if to talk about certainty, the most important section was the section 9. So there, for the consistency, the consistency part, the section 9, the retrospective amendment, it stays as it is. It has not been done away with.
Okay, so the most hated amendment continues to be there.
At least the one which has made so much of news. So that stays as it is in the statute. So
that's not good news for Vodafone.
For Vodafone, exactly. So in year 2012, when Section 9 was amended after the Vodafone judgment, that was the explanation 5 was introduced, which used an expression substantial value. Now that was left undefined. Now that has been addressed in this budget by adding one more explanation, which I'll explain in details once I come back to this.
Okay, so that triggered more litigation.
So that used to trigger more litigation. So I mean, we needed a certainty. So again, that C factor, that certainty has been addressed in this Section 9. Now there are plenty of other issues like the offshore funds. The offshore funds were actually moving out of India because there were some grey areas in the taxation which actually led to undue taxation liability arising on them. So that has again been addressed in this the offshore funds, basically in Section 6, and also because this can be actually classified under the head of giving some comfort to them. But if to talk about to tighten up the norms, the concept of the effective management, which is more known as the POEM, the place of effective management.
Right.
Now, what has happened is a lot of companies, they have actually set up companies in these countries like Mauritius or Singapore just for treaty shopping, but actually they used to operate from the Indian jurisdiction.
So practically they are Indian companies.
But
the board of directors, etc., they used
just
to avail
India. The benefits of the DTA, they used to set up the companies in Mauritius.
And avail the benefits
again, that has
available
been,
for non-residents.
Exactly. So without going into the detail, all I can say right now is that again that issue has been addressed in Section 6.
Okay.
Then some of the important changes are like, these are more, these are macro level changes, I would say, like in the capital market sector, that is the merger of the proposal to merge the Forward Market Commission
with the SEBI.
Right. So that again has lot of good news for the mutual fund industry.
Okay.
So that's very welcome.
So there is something more for the capital market.
Correct.
Okay.
Again, some impetus has been given in real estate sector in terms of MAT, in terms of exemption from capital gain tax to the real estate investment trusts. So I would again repeat the statement which I made, that it's like comforting with one hand and tightening with the another hand. So if somebody, those broad statements like corporate budgets and all that, I think that's a very premature and maybe a very motivated statement. But if you actually go into the finer points, it is a balanced budget, I would say.
It's a balanced budget.
Right.
But you see, the finance minister, with a lot of glow on the face, he talked about, that the corporate tax rate is going to be aligned with the ASEAN rate.
Right.
And over a period of 4 years, this is going to dwindle to 25% from the present 30%. But he has not given, that is not going to be effective from this year at least, next financial year, maybe in future. But on the other hand, the finance minister has hiked the surcharge across the board.
Right.
So is it not the case that, without giving anything, he has, taken away a lot of stuff, a lot of revenue, rather the cash of the corporate for doing business. It's the recession continues to be there. The slowdown, we are not out of the slowdown quagmire. Slowdown continues, and of course a lot of funds are available in the banks, but the credit offtake is not very appreciable. If you look at it, there is a lot of tardiness in credit offtake. So because it's expensive and investment opportunities are missing across the country. So in that case, how do you look at it? That Mr. Jaitley not giving, of course the corporate India were not expecting so far as corporate tax reduction is concerned, but hiking this the surcharge, and then again, across the board, you have AOP, you have firms, you have companies, you have individuals, everybody. So surcharge, is an do you think that it's an additional burden?
I think it is an additional burden. As you see, I discussed there are some structural changes. There are some macro changes which have been proposed in the Finance Bill 2015, which will actually generate more business, more avenues of business. Let's say if I take up the example of mutual fund industry. Now, if the merger actually happens between SEBI and Forward Market Commission, then what would happen is that these mutual funds which wanted to invest in the commodity market which they could not, because commodities are considered as contracts, not as securities. So, and mutual funds are driven or governed by SEBI.
Right.
So, since your regulator does not allow you to invest in these securities, so a very potent, a very potential option of investing in the market was not available to you.
Not available.
So, that will open up for you.
Fine, Sudipto, we will take a short break, and I will come back to you to discuss about particularly the changes proposed in Section 9 and what it means for corporate India, what it means for all those who continue to find indirect transfer outside India. It's a wonderful transaction, and how that is going to be impacted by the changes in India. Welcome back. We will continue with the debate with respect to Section 9, the most villainous perhaps section of Income Tax Act. So, Sudipto, you were talking about the changes which have been proposed, and you were also suggesting that this was a potential time bomb for triggering a lot of litigations. To avoid that kind of litigation, the CBDT has come out with this kind of amendment. Right. So, what is the clarification?
So, I mean, if I have to respond to those heavily loaded words like time bomb and draconian and all that, so I would only say, indirect transfer of shares is it's a reality, and it exists across several jurisdictions. But what the Indian taxation regime, the problem of the Indian taxation regime was that there was no certainty, and there were a lot of gray areas which had to be addressed. So this, the Section 9 has been made now more clarity has been brought in Section 9. So as I said earlier, that there was an explanation section, explanation 5, which was inserted just to, okay, book these transactions of indirect transfer. So it says that any transfer of shares by a non-resident transferor to another non-resident, it shall derive substantial, if it derives substantial value from the assets located in India,
okay,
then Section 9 shall get triggered. Now the problem came, what do you mean by substantial value? In 2014 there was a Delhi High Court, the SEC went before advanced ruling, they got a favorable ruling, the department challenged that decision, they filed a writ petition before the Delhi High Court. So again there were conflicting interpretation of that meaning of substantial value. So had it been left unaddressed, again this litigation would have continued. So that has been addressed in this Finance Bill 2015.
So what held in that Delhi High Court decision?
So they have actually they said that substantial value means majority of the value, if it is deriving from the assets located in India, okay, then it can be considered as a substantial value. Okay. So the change is in pursuant to the decision of the Delhi High Court only, and actually this can be actually considered as a welcome move towards the welcoming the foreign direct investments and to make this entire environment for the Indian Inc. more clean and more certain. So because see, if I'll be structuring a transaction, now at least I know in which all eventualities Section 9 will get triggered. Okay. As opposed to I am always left in a state of guessing that I am not sure when Section 9 gets triggered. Okay. So the substantial value has been defined, which actually says that if the shares which is getting transferred from, let's say, a country Mauritius, there is a non-resident company which is transferring shares to another non-resident company,
maybe in Cyprus.
Right. But as a result of that, the shares are getting transferred. So if those shares, they derive their value
actually from the assets located in India,
in excess of 10 crores of the assets located in the Indian company, and so it's not or, it's an and it is at least 50%, the entire valuation of the share should derive its value, which should be at least 50% of the value of the assets located in India. Okay. So if both the conditions are met, then Section 9, subsection 1, clause 1,
it will not get
otherwise, so at least you are clear now.
So Mr. Jaitley has infused a lot of stability and certainty in Section 9, which was actually scaring good number of investors.
Exactly.
Okay. Exactly. So it's good news for the FIs and foreign investors.
At least they are now, I mean, aware of their taxation liability. I mean, when this taxation liability can arise, instead of, I mean, they had to keep on structuring in such a manner to avoid the attraction of section.
For basically tax avoidance.
Exactly. So, I mean, going ahead, again, there have been changes in the private establishment norms, as I had, this also had discussed earlier. With respect to the offshore funds, because since these offshore funds were, I mean, there were plenty of Indian offshore funds, Indian origin offshore funds, which are operating in India. So they basically invest, I mean, across the world. Now these investments are taking place outside India, but the business connection norms were such, I mean, the existing business connection norms are such in India that just by virtue of your physical presence, of your physical operation in India, the profits which you make, even at the outside level, even from the investments which are made outside India, they get taxed in India, attributable to the activities, to the P, to the activities that are taken, that are undertaken in India,
as a P.
and plus the management fees also. So I mean, there are taxation at two levels. Now this problem has been addressed, and a lot of these offshore funds, I mean, ICICI has offshore funds, Axis Bank has offshore funds. I mean, these funds now can come back to India, and the fund industry has actually, the offshore fund industry has welcomed this change. So now it is tax liability is neutral. So even if it is in India, but if you are making investment outside India, you won't be taxed just because you are operating in India. So this business connection norm has been relaxed.
Okay.
So
because again, the source rule, the source happens to be outside India.
Okay. You know? And but again, I mean, if to talk about the tightening the norms, then earlier that these shell companies, which also had mentioned that they used to, I mean, make a, I mean, very mockery of these DTAs and used to go for blatant treaty shopping. So they again can't do this, because if they are having their control from India, and just because they have that in that one famous building in Mauritius where all the companies are operating, that won't
Cathedral Square,
exactly. So that won't entitle them any longer to avail the benefits of the DTA. So if their effective control and management, that is the place of effective management, that is the poem, is in India, then they shall be liable to, they'll be considered as a resident in India. And as
bad news for treaty shoppers.
Exactly.
Although, you know, government of India had not succeeded in getting the amendment done to the India-Mauritius DTAs.
But this way, at least this
kind of amendment will take care, but at least partly.
At least partly.
Partly, yes.
And poem is it's a very established concept. A lot of countries actually, they have defined what exactly means by effective control. So as of now, the bill only provides that it's only the crucial commercial decisions that are taken in India, then it will be construed as a resident, Indian resident. But as we progress, I'm sure the department would come out with more clear guidelines under which situations this would be construed as an Indian resident.
There's a little more clarity is required, maybe question answer format, you know.
So these are, I mean, some of the major reforms which were actually long due, and they have been addressed by our Honorable Finance Minister. So I think, I mean, these are welcome changes.
So that reminds me, you know, Asad, is there anything substantial on dispute resolution? Because, you know, I mean, the kind of dispute which are pending at various judicial fora, and if you look at a lot of frivolous appeals, a lot of cases the department is going in appeal, sometimes on settled issues, you know, even for instance SSCs also, sometimes they also, you know, they probably think that this is fun doing it, you know. So is there something, some kind of measures which have been initiated and which have been proposed in this?
Yes, in fact there has been there are two changes which the budget brings about. This is the income limit has been increased. It has been increased.
The monetary limit you are talking about.
The monetary limit has been increased to rupees 15 lakh. So now these are the cases which a single member bench can look after.
Okay, the IT level.
Yes. So,
the threshold is up now.
The threshold is...
So that the smaller cases where tax effect is very little.
Yeah. And another change which has been brought about is there are a lot of cases which are pending in which the same question of law against the same assessee is being done again and again, even though the same question is pending in a higher forum.
Okay.
So now, when a case against the same assessee regarding the same issue is pending before the Supreme Court, then the revenue need not make an appeal again.
Repetitive appeals,
Repetitive
etc.
appeal,
Maybe on the same issue.
On the same
Then you
issue.
wait for the decision.
Exactly.
That's a very sensible move.
That is sensible because it is absolutely choking the system. It doesn't make sense.
Filing appeal when the Supreme Court is already seized of the issue. Let the Supreme Court take a call.
Yeah, so it will be something like call book register where as soon as the judgment comes about, it will apply.
Okay, fine.
To speak of something which has been left totally unaddressed, that is the section 14A and rule 8D, which is actually very unfortunate, and it is still so many litigations are going on, a lot of scope of arbitrariness and a lot of actually unnecessary additions which have been done with by the department, and there is a feeling even among the department itself that this should get actually addressed. It is very actually strange to see that how come, I mean, a person of Mr. Jaitley with such vision, he could miss out this important issue.
It's a minefield.
He has brought out, he's going to announce a bankruptcy law because he's declared that SICA and BIFR have not worked.
Right.
So how do you think that's going to...
That's a very welcome move, and India actually, the Indian banking sector, especially the PSU banks, they have been suffering so badly. They are actually bleeding because of this non-productive assets, the NPAs. Then there's cases of willful defaults. I mean, I'm sure our TIOL viewers would be aware of so many cases of willful defaulters that the news of the Kingfisher's chairman, Mr. Vijay Mallya, being termed as willful defaulter, it made a lot of hue and cry and news. And unfortunately, even today, these issues of NPA, these issues of willful defaulter, they are only governed by a master circular issued by the RBI.
Absolutely.
So we don't have any as such any proper statute. I mean, and bankruptcy norms are there in almost every jurisdiction, be it UK, the Chapter 11 in US, they all have set norms.
Yeah, the winding up of companies.
So at least now, I mean, the banking sector, this is a very welcome move, and it's a much needed impetus to the banking sector to revive. At least they would be expecting a mechanism to deal with these errant borrowers and to how to, I mean, they manage their this credit, the entire credit health of this economy.
That brings us probably the last topic which we should be talking about is whether I should say the favorite topic for Modi government or a topic which is changing the Modi government as like a shadow. That is black money.
The topic of the country actually.
Yes.
Everyone's talking about
it. But in India particularly a little more, because our judiciary is, seized of the issue, and the civil society is very concerned about it. The government is, of course, they have to be, because it was their pole plank also. So Asa, can you tell us briefly about the black money thing, the key features, and really do you really believe that the measures proposed by Mr. Jaitley actually will be strong enough to bring back every rupee with the Prime Minister is talking about, which has been stolen from this country and kept in those beautiful vaults in Swiss banks?
Well, this is a very bold move which Mr. Jaitley has taken. We have had lists of Indians who have foreign assets overseas, but so far nothing really has been done about it, and it's just like moving the ball from one court to the other. So I feel Mr. Jaitley is sort of getting ready. It's a good initiative. He's gathered everything. He's going to put out a new law, and the essential thing which he wants to do is not only target and stop the generation of black money in India as well as overseas, and he also wants to bring back the black money stashed away overseas. So the essential points are everyone has to declare the foreign accounts and foreign assets overseas. The filing of return is mandatory relating to foreign assets. Non-filing of return, false declarations, inadequate disclosures or concealment of income or even evasion of tax on foreign asset has been made a predicate offence. which means that it will enable the authorities to not only attach and confiscate unaccounted assets which are held overseas, but also confiscate an equivalent asset value situated in India in case they cannot get overseas because it's a cross-border this thing. Now, the tricky thing is he's made it so harsh that any non-filing or inadequate disclosure can attract rigorous imprisonment up to 10 years.
That's
which is very harsh, which is very
kind of economic offense. Maybe
and in fact, I would like to chip in here. I mean, it's a question. Since the draft is not available and we don't know actually how this law would actually look like, how is it going to shape up? But just a question which is coming to my mind, that since we are more concerned about the money which is already stashed away in the tax havens and which India has lost, which we want to recover.
Yeah, how is he going to bring it back?
And is it going to be retrospective?
Exactly.
And if retrospective, then it talks about criminal offense, which means there will be a imprisonment.
So basically, I
think
he's going to probably have an amnesty scheme. He is going to give people a chance, an opportunity to declare their foreign assets which are overseas, and if they don't, then probably this law will kick in. Well, we don't really know exactly.
But it's a very vital point which Sudipto has raised, that ultimately it's going to be a criminal offense. And you cannot, apply retrospectively.
So, the problem would be, it would be a blatant violation of the constitution. So, a criminal offense, when you did that, it was not a criminal offense. Now, it cannot be made retrospectively a criminal offense. So, that would be challenged the day it comes into play.
And it will not stand the judicial scrutiny.
Exactly.
Yeah, so we just have to wait and watch and see how it...
Another aspect, Asa, that Mr. Jaitley also talked about, he proposed in the finance bill itself a few amendments in Prevention of Money Laundering Act, FEMA for instance, and it looks like the kind of power he's trying to vest into this enforcement.
The predicate offense where that comes in, that is introduction of a 37A section in FEMA.
Okay.
So that gives the powers to the competent authority to attach your property in India.
The FERA, again, we are going to waste so much of power in the enforcement officers under FEMA. Are we going back to FERA? The question is that at one point of time, FERA was described as the most villainous act by corporate India. The government of the day took a call, and they also considered that yes, probably it is being not misused, it is being terribly abused. And therefore, it was guillotined. It was replaced by a new act called FEMA, Foreign Exchange Management Act. Again, you are putting, so much of power in, inserting new sections, vesting power for attachment, for arrest, for jail, etc., etc. Where exactly we are heading for? I think Mr. Jaitley should be taking a call. So, let me now wrap it up. Of course, the black money is going to be the real challenge for Mr. Jaitley. The entire nation and the experts, the constitutional experts, the domain experts, and even common taxpayers will be looking forward to those expressions, those words, the language used in the legislation, and only then one can talk about that how a prospective legislation is going to recover the money India lost in past 25-30 years. But whatever it is, the intent of the Modi government and the Mr. Jaitley must be appreciated, that this legislation is going to curb the growing phenomenon of trade mispricing, the black money generation, and taking it away out of India through various channels like Hawala, for instance. Maybe foreign currency smuggling itself is a serious problem for India. So there are different ways which are resorted to by different kinds of economic offenders. Before that, I personally feel, and even my editorial members, they think that Mr. Jaitley has overall presented a very balanced budget. The only area where we feel that Mr. Jaitley perhaps could have avoided was that he has not only hiked the service tax rate, but also going to levy again, which is yet to be notified and announced, that on certain services or all services, Swachh Bharat cess is going to be there. So, this is going to be 14% plus cess. So, from that perspective, because services are being availed by every individual in this country, every citizen in this country, and incidence of burden of the service tax, the indirect tax is going to be almost equal for every segment of people in the society, whether poor, middle class, lower middle class, upper class. So, that could have been perhaps avoided by Mr. Jaitley. But nevertheless, let me congratulate Mr. Jaitley for at least coming out with some kind of vision document, some kind of, he is trying to infuse the element of stability, certainty, which were missing earlier, and of course, a roadmap for tax reforms also, which he has promised that ultimately the government will take a call on Dr. Parshathi's home committee reports, which are of course badly required, because our tax administration needs to be toned up, needs to be perhaps restructured, and it has to undergo some kind of overhauling. So, thanking you for watching us. We will certainly bring more reports, more analysis, more insightful debate on the issues of indirect tax, maybe very soon.